So maybe let's everyone a little bit like open up, because like being as an investor is not actually easy one. And you know, I have been also doing some investment beside Pipedrive. I have been investing to Testleo, PandaDoc, recently Dashboard and Verif. I have found being an investor so difficult, because it's just many times you see, oh my God, these things what you do is so wrong. You want to jump in, but no, you can't, because like they are running it. So let's everybody, before we jump into the topics, and one more important thing, I have here like this fancy application. If I have questions hidden, I can actually see them on my application. I believe it's using Twitter feed, isn't it? Is it? Or how I get the questions?
Slido.
Okay, anyway. So you can use Slider to send me questions. But first, let's everybody tell what was your story, how did you move from being an entrepreneur to the investing and others you have been invested at, and what excites you about that, why you love this, what you do?
Yeah, sure. Yeah, so I've pretty much always been an entrepreneur. I never had a proper job, so to speak. I've been like working on various entrepreneurial projects, even as a student, and then one thing came after the other, and in 1997, I started my first internet company, and another one, and so on. So I'll keep that short. But then after selling the second startup in around 2008 or so, was quite clear to me what was going to be next, and if I would start another company. And it was just basically looking around, browsing the web for interesting ideas. And then I came across Zendesk, which at that time was literally 3 guys in a loft in Copenhagen, and they had built what looked like an interesting site and product, and so I got interested in that, and it was a good timing. They were also looking for some seed money, and so I became their first outside angel investor, and then basically just happened that then this worked out, and I learned something about SAAS, and I looked for other companies that shared some of these characteristics, namely around the consumerization of enterprise software, and then made a couple of more angel investments, and then eventually a couple of years later teamed up with a partner to start Point 9 Capital.
Mm-hmm. What is, by the way, usual ticket size for the Point 9 Capital?
It's about 1 million now. It's been somewhat smaller when we started because we had a smaller fund in the beginning. So nowadays it's between, let's say, 500,000 and 1.5. So it's gone up, but it's still very much focused on seed and mm-hmm. like the right stage.
And I will ask indeed the same question from everyone. You also like, how much takes time in your own company from the first meeting, money is in the bank?
It's a very, very wide range. I think maybe the fastest process that we ever had was maybe really just a few days between the first meeting or call and a signed term sheet, and then usually it takes a couple of weeks if it's an equity financing round, just where the lawyers stick their heads together and figure stuff out. If it's a convertible loan, and it can also sometimes be done in days, but typically it takes longer. So I think to be honest, despite the fact that we try to be fast and we can be fast, we also take our work seriously, and that usually means we want to learn more about a company for at least a couple of weeks.
Okay. So Marta, having been spent all life in investing, so what is so great about that?
You make it sound like a really, really long time, and maybe it has. But I've lived in a bunch of really messed up countries, and I studied nothing to do with technology. It was philosophy and politics, and I thought I wanted to save the world by doing it through politics, and I realized that's definitely not the way to save the world. And then I figured technology is probably the right way to empower people with really fast-moving projects and products to make all sorts of changes. So that was kind of my mission. And actually, I didn't even know what venture capital was to begin with. So I got a suggestion that I should intern in it and figure out kind of what my intellectual curiosities in tech are, and then probably like go build a tech company. And nearly 10 years later, I still love this job. I get to work with amazing entrepreneurs on a daily basis. I've been very fortunate to be part of 2 VCs, one called DN Capital in London and Silicon Valley, and now Northzone for the past 6 years, and really kind of following those journeys that take a long, long time. I mean, that was, last week when iZettle was sold to PayPal, that was a big moment for me because that was the first transaction that I worked on at Northzone. And that was like, 6 years later that you see the journey come to an end. So to me, it's about understanding the heartbeat of technology companies and really being able to support founders in the best possible way by, being humble about things that I do know and things that I don't know, and trying to be as resourceful as possible.
Same thing, like, what's the ticket size? What's the, how long this process, and what's your usual take on that?
Sure. So this current fund, so we have 8 funds under management to date. We're 22 years old, so we have about nearly $1.5 billion under management. This latest fund is a $400 million fund, and it's 2 years old. And from it, we can invest anything from, just south of $1 million, like 500K to $1 million is really the smallest. We call it seed stage investments, all the way to 20 or 25, arguably. But our sweet spot really is $3 to $10 million. And that's in the first check. And we typically reserve 3 times the amount during the life cycle of the fund to continue investing.
Okay.
And in terms of process, we can, like every VC will, are we allowed to use profanity here? We'll bullshit? Is that okay? Is it on TV? No. I think VCs generally can say, oh yeah, we can move super, super fast. I think, yes, you can make that exception, but similar, I like the way you put that. We take our job very seriously, and frankly, the best investments we've made, like iZettle and Spotify and Avito and Trustpilot, Trustpilot is an exception. We kind of knew Peter before. We've been brewing those relationships for years. So yes, we can move within days, but really that relationships and the trust of the entrepreneur that we back take a longer time, as they should.
But what is the right time when I contact you? Because usually I think that one mistake what we do as an entrepreneur, we many times start maybe fundraising too late. What's your take? What's the best time to contact you and start to build a relationship?
Once you have a product that's, at least an MVP, and where you start collecting data, we can very quickly turn around and say, look, too early in terms of the KPI side of things. But the best thing about reaching out early and building that relationship is that you're able to monitor progress over time. The best entrepreneurs out there, I feel, are the ones that continue to set their own goals and then beat them. And the best way you, as an investor, can track those is by following that development over time. And then you can call it, I tweeted something yesterday on the concept of pre-Series A. Fred Destin and I were commenting on it. It was 5 years ago you had seed and then you had Series A, and that was it. Now you have pre-seed, seed plus, seed extension, pre-Series A.
So you can rise seed until
that.
IPO, basically.
Yeah,
well,
you
literally,
forgot a couple of bridges in the middle.
Right,
Yeah.
exactly.
Yeah.
And so we like to follow companies as they take in capital and they learn how to manage capital. And then we like to step in once we feel like, oh, okay, they've hit some kind of a trajectory, some kind of a stride that we understand how to help them in the next step of the journey. And sometimes that can be seed, sometimes Series A, sometimes Series B. It's rarely past Series B.
Got it. Okay, Sergey, let's talk about your story. How did you end up in investing, and what's
So I was always working at startups. I never worked for a big company, and originally I was in more technical roles, part of a management team. At some point, I kind of started to move towards more I was part of a founding team. Then at some point, after I kind of switched to the dark side, did the business degree, I kind of found myself working with a bunch of startups at the same time. Then it kind of gradually moved to angel investments, and I joined Flint Capital about 3 years ago as a partner.
Okay. And what is your company usual size of the check, and where you want to get in, and what's the process?
So for us, sweet spot is about $2 to $3 million checks, although we like to put a couple $100Ks in the previous round just to kind of open the door, and we usually reserve for follow-ons, 50 to 60% of the funds. So we usually want to put in a company plus or minus $6 million over the life of the company. In terms of time to decision, it really varies. I mean, I prefer to start talking to companies when we're not raising, just to get to know them and kind of start working with them. So in some cases, from the first meeting till we actually put in a term sheet, it can be up to a year. Word of caution, I like to compare the slide deck you sent me a year ago with today's. It's very, very insightful how your slide deck changes. And on a short term, on a short side, one of the last deals we did it in a day and a half.
Oh, really? Oh, okay.
Day and a half, yeah.
Oh.
How, it was time pressure, or you just loved it?
It's like, well, for one, it's a smaller deal. It was not like a round, it's more, it was several $100K check.
Okay.
It was a good company, basically. We did it with Vinod Koshla, and it's like...
Okay.
Let's just say the deal was oversubscribed by like probably 3 or 4x.
Okay, got it. Okay, so Lauri, relocated to Silicon Valley recently, started as a front-end engineer, now working in Creandum. So tell us.
So I guess the latest news is I'm actually back in Stockholm.
Oh, you're already back in Stockholm. Oh, sorry, I didn't know that.
As you gave my introduction, I've been really indecisive in my life. Perhaps it's been a mixed road. I earned my first paycheck as a web designer. Then, as a hobby, I built a online game that attracted a couple of 100,000 users. And then I ventured into web development, and then at some point thought it's enough about development, and thought it's time to do business studies. So I was educated at Bocconi University in Milan, and after that entered the startup world. I joined Moniz, which is a consumer neobank, an Estonian startup. And I worked as a business intelligence analyst in there. And as a financial institution, you're really swimming in a lot of data. So I was in a position of designing many KPIs, understanding what actually makes sense for you to run your company by, in terms of understanding how your customers use the product, your unit economics, and things like this. So it's been a mixed story. I've sort of become, in a way, a jack of all trades and a master of none, and VCs, by definition, need to be, I guess, in a way. So I seem to fit the bill quite all right. Joined Creandum while we were raising our Series A at Moniz, and I've been in the VC space for 1.5 years now. It's been a good journey so far.
And what is Creandum now, like usual sweet spot where you check size, approaches?
So we focus on early stages. What it means for us is seed and Series A, with some opportunistic B rounds thrown into the mix when we think that we've missed a really exciting company in Europe or in our core markets. And what it means in practice in terms of ticket sizes is usually from $500,000 up to $10 million in terms of initial money in. And we try to act as lifetime investors, and half of our funds are allocated for follow-ons to take our pro rata and companies.
Okay. So let's a little bit now, I think that many founders want to always know what's really going on and how you see the companies. So Christoph, you have seen most likely, but by the way, how many different companies you look annually? Do you know the range?
Yes, like we log them in Zendesk. We use Zendesk to track our deals.
Zendesk, not Pipedrive. Wow. Huge mistake.
Sorry about that. Yeah, that's just.
Like it is not advertising, but I know many VCs using Pipedrive.
Yeah, both great products.
Yeah.
But obviously I have a lot of loyalty to Zendesk, and I get it for free still. I think nobody knows that I still have a free account at Zendesk.
So you know the number. What's the number?
It's about 4,000 a year. But obviously a lot of them are like relatively quick passes for us, because maybe it's just completely out of our focus, or just maybe where somebody emailed us more or less randomly, but it's also a large number of like really potentially interesting companies. Okay. Yeah.
But what this kind of like usual red flags or common mistakes but people are doing all like, oh my God, go, go, go. So can you give hints, like what's those things?
I mean, they are like probably some of the
much
worst
time do
examples.
we have?
The worst examples you probably share because that's somebody writing an email with every VC you can imagine in CC.
Really?
That happens occasionally.
Really? I want to see those people. Do you have anyone in here?
Yeah, this is where you feel really
Oh my
sad
God.
about it. And then I think maybe in general, I think as a founder, you should obviously do your homework and do research. Who could be a good fit in terms of the stage, what they bring to the table, what they specialize in, where they invest. And so if somebody pitches us for a Series C or for a, I don't know, a gas and oil exploration, it's obviously not a fit. And we see everything on that spectrum.
Okay, interesting. Yeah. What about, like, Marta, what's the thing that you actually, if you look like this founder is exciting, what kind of things you look in the founders when you start to speak with them and so on? You?
Me?
Yeah.
What they have, they're usually like borderline obsessive about what they're trying to solve. It's not about what they're building, but what they're trying to solve. And they have they're usually very intense, like to the point of making you a little bit uncomfortable. I think that's,
So you just want to leave the room and oh my God.
you kind of like, you can't really tell whether you want to like hang on to your chair or like stay close to a door or like something. They're usually very, very intense, and they're obsessive about the product, and usually they're fantastic debaters. They're counter to popular belief that you have to be a great salesperson to be a great, kind of outward-facing founder, CEO. Usually, you're the, as CEO, you're the outward-facing person. I actually think that it's those that can convey the product vision, coupled with how they're going to win the game over a longer period of time, that really capture us. So, when the Spotify guys, for example, came in and put up a really stupid number as their pre-money valuation expectations.
It was too high, yeah?
Yeah, it's
Okay.
like ridiculously
So
high.
what was the number? Come on. See, I know in IPOs.
It's televised. Like it was. It was a significant double-digit million.
20 million? More.
More.
Oh my God. It was seed round?
This was a series. They didn't take a seed round.
Okay.
They put in some Martin and Daniel put in their own money, and then they took a couple of, like Felix put his own money as well from like previous companies that they had built, and then they built it to the point that they had really insane engagement metrics, and then they sort of said, well, this is the journey. You're invited to take part in the journey, and then they put the price tag, and we're like. Okay, so we sort of, after a while, we succumbed, and with Creandum, we co-led the Series A, thinking this had better be worth it. And frankly, now it's easy now, like 10, 11 years later, it's easy to look back and be like, oh yeah, of course it worked out. It's a pretty solid investment. But it really took, to my understanding, like the first 3-4 years were just, you were really in the dark because the licensing wasn't there, US wasn't there, premium was kind of getting there, but it took like literally 4 years and 2 more rounds for us to start seeing that it was actually taking off properly.
So your take now, Sergey, about that said, what you're looking, because you're more technical, do you want to more like invest in technical startups, or what's your take, like what kind of people impress you?
So when I talk to founders, first thing I want to understand why you're doing it. It's actually a good question to ask because it kind of, it gets you through many kind of check boxes. Usually it tells you if people actually understand their field, if they actually passionate about it and things like that. So, and yeah, I agree. It have to be, most of the really good founders, they kind of obsessive to the level of craziness. From another side, in many cases, you want them to be at least a little bit coachable, which is kind of a little bit orthogonal to that, because you know what, in many cases, you want them to listen to you at least sometimes, not all the times, but
Okay.
And we're looking, I mean, I guess it's like pretty much every VC, we're looking for unicorns and we're looking for big stories. So we're looking for a vision which can take you there, which is not like, let's build something small here and sell it for like 50 million, long run and kind of.
Got it.
You reminded me of something that I think we forgot to say, and I think we'd probably agree broadly, is that we try to look for self-sufficient founders, like not people who are going to be looking for a one-stop shop to help with everything from presentation design to starting up a new country. We do provide that assistance in terms of recruitment and all these other things that typically VCs do, but we try really to look for founders that think that they know it better than us, and then we can sometimes very, very seldomly come in and help when they really need it. I think those are usually the investments that work out best for us.
Great.
And one thing, just to add a little bit, because of our structure, we're like really distributed. So we have like office in Tel Aviv, Boston, Palo Alto. One of the things we're trying to do is to help, like especially Israeli and European companies to come to US. And I really love working. I have a couple companies where we have first-time founders who are really, really smart, and you start working with them. And from one side, they listen to you, they kind of get your help, but they kind of self-sufficient. And it's like especially gratifying when you see the journey, like you do the A round, when we do B round, and later on, and you kind of at the A round, you kind of think, okay, the guy is really smart, he is good, but it's quite possible that after the B round we'll need to bring in like big CEO. And when you come to B round, you realize, yeah, we're not going to bring anybody else. This guy is perfect for this company. So
guy
this
or
is
girl?
like, yeah. To be,
Okay, I actually want
like,
to take now one question, and Lauri, you can actually answer it. So it's a very interesting question. Someone asked, is SaaS still relevant as an investment niche? Nearly everyone does it. Lauri, what's your take on that?
So I think SaaS investments will still be relevant. They are still relevant today. But one thing we've seen is since, as you said, everyone is doing it, it's becoming increasingly difficult for us as investors to pick the best startups. Because if you carve out you can always carve out the small segment in the market and serve that sub-segment very well. But that's not an indicator that you can scale across the bigger market. So you can find product market fit within underserved segments in the market, and then reach to significant MRR as well. But we as investors need to be very conscious about the overall market opportunity. As Christoph mentioned before, your minimum ambition should be that you can reach 100 million ARR.
What are the very other important metrics that you follow after MRR in the Creandum? So give us like the numbers. What do you look really?
So when it comes to numbers, it's a lot about unit economics. Understanding your customer acquisition cost side. What we've seen today is that initially your customer acquisition costs can actually be really low because there are a lot of low-hanging fruits. Targeting has become really, really simple, and the knowledge is widely available. So the initial customers you acquire, they have the most distinctive need for your product. But when you really start pouring more money into marketing, customer acquisition costs tend to increase quite significantly. And the way we investors think about companies and profitability is maybe different than traditional entrepreneurship. Is that we think about unit level profitability. If a company is on a unit level earning profits, then there's always path to profitability at scale. So we try to understand and build a meaningful picture around that in terms of scalability of your distribution and acquisition channels and what your lifetime value of your customers will look like. And one key aspect to the lifetime value is understanding activity side of the product and retention, which oftentimes is even more important than crude revenue numbers because it paints a much sort of longer-term picture of the company, the predictability of revenue base, and so forth.
Okay, so I know that you are very famous, Christoph, for doing this napkin, which means that you need to collect huge amount of data. So what's in your take, and you are basically publishing this every year, this napkin?
Yeah, like since 2 or 3 years now, yeah.
Okay.
Like for a
okay.
few years, yeah.
I really like recommend that people like you can just go on Google and know, is it SAAS napkins or how you
Yes, SAAS napkin. If you enter, if you Google SAAS napkin, you'll find it.
Pretty
Maybe
much
we'll
like
also have some of
you
them
have in
here,
one
yeah,
napkin
yeah.
like putting you like 3-4 boxes, what's the valuation,
Yeah.
where you need to be. So if you just now analyze the last 12 months, what's your take? Like what is the biggest trend in here? Like what's the changes in last 12 months? Is it do we see more, whatever, minus seed round or whatever we call them, or what's your take? Like what's the changes now has happened lately?
Yeah, I think maybe in the last 12 months, or let's say 1 or 2 years, I think maybe the biggest like thing that is maybe changing, or which just investors I think are discussing, is like the defensibility of SaaS. Like this notion, as you said in the beginning, like is SaaS over, or what kind of opportunities are there still, given that you have large leaders in areas such as sales, like CRM, marketing, customer service, and so on. And at the same time, I think there is this fear maybe that a workflow solution alone is not that defensible in the end, because today it's obviously much easier to build a SaaS product than it was like when you started Pipedrive, or maybe even earlier, where you just didn't have this huge amount of APIs and infrastructure as a service and all of that. So it's much easier to get going, but maybe harder to build something that is highly differentiated. And that's why I think most SaaS investors are more concerned about finding some kind of moat, like whether that's through proprietary data, which you can turn into some kind of insights that make the product better, or have some kind of marketplace. But I'm personally wondering if this is already going a bit too far, because I think it gives a little bit, for my taste, a little bit too little credit to just the execution part. I think it's still very, very hard to be really, really good at all of this, product, sales, marketing. And so if you are like at, let's say, 10, 20 million ARR, I mean, I wouldn't say you're unstoppable, but you've learned so much about your industry and how to run this company that it's also not like any random graduate or maybe any random YC startup will kill you overnight.
Got it. So I want to also touch now like ICO, because people has been great last year. Now I think that today is 10% down again, all this crypto. But so, and we have seen some ICOs. So Marta, what's your take? Like, have you looked at any company who has done ICO? Are you afraid of them? Some people believe ICOs will kill VCs. What do you think? B2B ICO, would it ever has match?
I laugh because we've, over the past year in the partnership, have had a lot of very, very stormy discussions around, obviously we can't keep our eyes closed and pretend it's not happening. Are we afraid that it's gonna like take over our business? I think any industry is doing well when there is threat of being replaced. I think it's only positive in many ways, and I don't see in the short to medium term how it will displace us for a number of reasons. But I do see that in the long term, there might be space for more distributed funding, right?
So none of your portfolio companies have done ICOs?
Not our companies, no.
You have?
Yeah.
Yeah, and so give me an example. What was that?
So we have, we have one company done ICO, one company actually in the process. We're not involved with it. We kind of said, okay, we stand behind the founder. So if you want to do it, it's your company, you want to do it. We, for obvious, legal kind of limbo, we're not going to get involved. But I think in some sense it's going to stay. It's certainly not going to replace VC model. I think in some sense, look at Kickstarter, right? So Kickstarter is crowdfunding for hardware projects. In some sense, ICO is crowdfunding for services. You create a token which is kind of payable for certain services, and you just sell it to crowd. one, there was whole craze last year when basically it's like everybody was participating. And what happens now, most of the ICOs, they pretty much private placement. You just have some guys who...
You mean like Telegram did? Like,
Telegram.
They use this kind of infrastructure to do the funding, but they're actually not going after the public. They're going after the funds which are doing this.
But there are two things. First, if somebody starting companies ICO is one thing, but somebody who is VC funded and doing ICO, I have not heard too many these kind of stories.
So it's problematic because basically there are too much uncertainty. Like, are we going to be able to exit this company in a normal way after it has ICO? So there's one thing for both companies. We said you're going to do it the right way with registering with ACC, like basically cover all your assets, like twice. And it have to be something which is like real, because the problem with like 95% of ICOs, you just bring blockchain name to something which have nothing to do with blockchain.
Yeah, blockchain for chicken or whatever people are running.
Yeah, so in both cases it actually made sense. So we do have some product. We already had some product. We already basically were companies with a business, with like revenue, and it kind of, their product made sense for the ICO, so it's okay. But yeah, I think there is a lot of uncertainty there. We're gonna see probably in the next couple of years a lot of like hype going down, a lot of regulation going up.
A lot of scams still.
Yeah, hopefully scams will go away because of regulation, because basically, I think SEC just served another like 70 subpoenas yesterday or something like that. So I think it will go down. I think in 5 years we'll see ICOs, but they will be more like crowdfunding campaigns, like more like the infrastructure to do the funding. So instead of like regular funding round with 1 or 2 or 3 VCs, you're going to have funding round where you can kind of get more parties involved and you use this as infrastructure.
Okay, so I'm taking now the one question from the audience again, and then give every person possibility to answer, because Johannes has asked which come first for ESVG and why. And he said first is team or idea, timing, or something else. What's your take? What's the most important thing if you look at any company, and why? One thing only.
I feel if you think about these options, then timing is something that's really difficult to evaluate as investors. It's always clear in hindsight, but you're often wrong when you look at the opportunities before. So team is eventually it's the most important thing, and when we look at teams, we want to see that it's a well-rounded teams, because more homogeneous pack of individuals is more likely to make bad decisions. So we want to see that there's technical talent as well as team being very good at sales, and also when you go back to the good characteristics of a CEO, then I fundamentally believe that the CEO really needs to be good at sales, and it extends in many ways. So you're good in sales in terms of selling your vision, which means you're good in fundraising, selling your vision to VCs. And as an extension of that, you can also sell your vision to your potential hires. So one thing we've seen across all of the successful startups we have in our portfolio is that they're being incredibly good at selling their vision to the employees, getting people that are aligned with them, and scaling their business like this, and ultimately selling your product as well. As Christoph mentioned before, you're most likely to be your first VP of sales. It's very difficult to find a person who's more incentivized and who understands the vision better than yourself to sell the product. So you need to take the first steps yourself, usually.
Okay, we are running out of time, but I still give everybody also the comment that if you have different answer, because you most likely will all say team or not.
Yeah, it's almost a cliche, but nevertheless, I think it's true that the team in the end matters most. I think in order to really like have an outcome like Spotify, I think one of these amazing outliers, and let me know if you disagree, but probably everything needs to be aligned, like the stars, I think, have to be aligned in terms of timing, market, team, pretty much everything. So it's not either or for a really large outcome. But I think, I don't want to choose between a good market and a good team, but I think that the team is what stays, so that if you bet on a good team, they might still find a way to pivot or extend the market. If I had to choose, I would rather take some risk on the market and make sure I invest in the best team, but at the same time...
But you would never invest most likely stupid ideas anyway.
There have been 1 or 2 cases where we seriously considered that because we really thought the entrepreneur was so good, and we didn't. Probably we should have done it in the past because probably we just didn't get why the idea was actually good because,
There's no stupid ideas because...
but you have to, maybe it's more about conviction, but maybe a last point to add is that at the seed stage where we invest, the teams are not the kind of rock star teams that maybe you wish you would find. They're usually pretty rough around the edges. It's not like you have somebody who's done it in sales, somebody who's already done this and that before. So we have to bet on the trajectory of these teams.
Got it.
Which is super difficult. So
Marta,
sometimes.
What's your take? Is there any original secret sauce what you can add on that?
I'll just copy and paste what you said, basically. I mean, the only thing I'd add is that timing, I think, is akin to luck. There is, unfortunately, a large element of luck of just hitting the right timing in terms of the market, with the right early customers, with the right early employees, and end up being scalable employees. So, and that's more to do with, you don't know that as a founder to begin with, right? But luck, maybe you scale with the team. So I think luck has to do a little bit with it, which is very difficult to predict, right? So we, finally, our job is to build conviction around a couple of the items, and then there's always the unknown unknowns, which is always at least a third of the risk that you take. But the other two, you need to have some conviction of what does success look like if we take the right risk, and otherwise, do we hold out or do we just not take the risk at all?
Yeah, I agree completely. Team is the key, and usually, to your point, if the idea is completely stupid, probably the team is not that good. A good team usually come up with the idea can be risky. It can have wrong timing. There are maybe a lot of things which can go wrong. And luck is certainly a very important thing, but the first is team. Basically, the company is made by the team and companies are killed by the team. If a company is going to go down, it's probably because of the team.
Just to quickly add some color to Christoph's comment about taking risk on market size. We had David Helgason, founder of Unity, at our AGM, and just to paraphrase him, he said that TAM, target addressable market, is only limited by the imagination of your management team.
Yeah.
Great, that's a great one. That's a great one, amazing. And sorry, we're just out of time. I had so many questions more. I wanted to take would you fire CEO and these things? Oh my God! But that's why I think that we need to invite them back to Estonia. Most likely have more time. So let's give a very big hand for these smart guys here. Thank you.
Thank you.